January 2nd, 2026. Let's see how many times the strategy came into effect today. As always, we look at the daily momentum indicator to get a gauge of what's going on. So before today even happened, we knew that our momentum on a daily basis is going down. We've got selling pressure building. Today was a very textbook day with regards to reading the daily momentum. And let's go to the market open and see how many times the strategy came into effect. What we want from the strategy is an alignment between the 5-minute momentum and the 2-minute momentum. We use the other higher time frames to gauge and get a little bit more understanding of the situation, but really the 5-minute and the 2-minute is what we care about. So here's the 5-minute extended hours. It displays different data because it's taken into effect the pre-market sessions. So this is the 5-minute extended hours, and then over here we have the 5-minute regular hours. So as the market is opening on this first candle, as the market is opening, our 5-minute regular hours is going to the upside, catching up with the previous market day because we had a lot of upward action in the pre-market. But anyway, the 5-minute extended was telling us the opposite. It was holding towards the downward direction. They didn't become aligned until about right here. See how they're now both going up? This one remains going up, 5-minute regular. This one begins going up a little bit later, right here. Now it's going up. This is a trade I would have taken, entering at the close of the candle, targeting a 2-to-1. That's why I put this line here, because I actually wanted to take that trade to the upside. Because why? We have a volume confluence, a volume bar greater than the previous three. We're on the right side of the momentum. The 5-minute twins are giving us permission to take the trade. I did not take the trade. If I would have taken the trade, you would have seen a yellow line, but I wanted to. And then we go forward. The 5-minute starts to taper. Now it's tapering. Now it's tapering even more. It's tapering even more. Now we're going down. The 5-minute extended is really low, so it's ready to go down. The momentum has already flipped to the red. 5-minute regular hours has not flipped to the red yet. It's working. We want it to get lower before we start taking trades to the downside. We don't want to just start taking trades just because the histogram starts going down. No. We want it to be close to the middle point, or we want it to be crossed over. So that's why this red line was here, is because this is a trade right here, this red line. This is a trade I would have taken, but the 5-minute hadn't crossed over yet. This 5-minute has started the crossover. This one it just hasn't gotten there yet. In hindsight, man, I missed out, because look at how great that trade would have been. And then the next occurrence was right here, this trade that I took. This was Trader Kane's situation coming in to effect along with my strategy. This was a combination of our strategies. Very interesting. Who is Trader Kane? What do I mean? Trader Kane is an extremely successful trader who makes more money in a single month than a lot of folks make in a whole year's salary. And he does that off of one or two strategies. One of them is he waits for a big sell-off in NQ, a clean sell-off that's large. What do we have here? We have a large clean sell-off. Then Trader Kane says, okay, I want to wait for a large clean sell-off, and then I want to wait for a retrace half of that level. That's what we got right here. We had a retrace to half of this level. And then he says, okay, I want to capture the pullback from that retrace, half of that. So these are called halves. Here's the full distance. We go up 1/2, and we go down 1/2. That's what he tries to capture right here. This move. How funny was it that my strategy overlapped with his strategy today? That's why that yellow line is there. That's why I entered the trade. It came down. It retraced roughly 1/2 of that movement. And then we get what? A power volume bar greater than the previous three. That's why I entered this trade. What a great win it was. Entry at the close of the candle, stop loss slightly above that candle, targeting a 2-to-1 for my first profit. Then I let runners run to continue making more money, taking more profit. That was a good trade. And I got stopped out right here. I decided to take trades in the middle of the market. I normally avoid the middle of the market. I normally don't trade past 10:30. 10:30 was here. I normally don't trade past this point. But I decided to take these trades with very small size so that in case they didn't work out, it wouldn't be that much of a loss because I'm just going to use small size. I just wanted to trade, you know? So I thought this was going to go down because we're on the right side of this downward momentum. We have a pop right here. We were going up, and then it started to pop with us, and we get a power volume confluence. So I entered here, put my stop loss here, and I targeted a 2-to-1. 2-to-1 never hit. The stop loss hit, so that was a loss. As it was losing, I entered the opposite side, thinking that now it's going to go up. Because look, we have a volume bar greater than the previous 3. We're on the right side of the momentum. Entered here, put my stop loss here, put my target right up here. Never hit target, hit stop loss again. So I got So 1 loss, 2 loss, back to back. That was pretty rough. But it happens. Now we're on the right side of the momentum. We get another power volume bar. This is starting to come down a little bit. Horrible trade to take because this wasn't near the middle point. Nor was it in the red. But I took it, thinking it was going to go down. Put my stop loss here. Never hit stop loss. It did hit target. So I took profit here. And then I let it continue to run. And I took a lot of profit. That was good. That was a good win. It was a high risk play because the 5-minute MACD, though it was going with the trade, it wasn't close to midpoint yet or red. So it was a high risk situation. These were 2 plays to the upside because look, on the right side of the momentum, power volume confluence right here. But this was kind of weak, yet it was going up. So we had some upward backing behind it. So that's good. The next one here. Now we have a lot of momentum building up. What happens here? We sell off, we sort of get a nice push back up with a volume confluence. Would have been a great win, didn't take it either. My last trade of the day was right here. And I took this trade, why? Because we're on the right side of this V, we're on the right side of the 2-minute momentum. We have a power volume bar that just occurred. I missed the entry. The entry should have been up here, but I missed it and I entered on the next candle. Like midway through. 5-minute had been working down for a while and it was aligned and close to midpoint. So my entry was here, stop loss up here, first profit target was here, took profit, allowed the rest to keep running, took great profits down here as well. So 3 good wins, 2 small losses. I say 3 good wins. Actually, it was 2 good wins, 1 and 2. This win was not a good win because it was just the 5-minute wasn't ready yet, and it was just not the best setup. 3 wins, 2 losses. It was a good day, good first day of the trading year. And with all of that being said, see you in the next one. Take care now.